Silver is moving, but not in a straight line. Historic ratios, technical patterns, and massive COMEX flows are making headlines. Today, we'll break down exactly what the experts are saying. First, let's start with a detailed breakdown shared by the Kobisi letter. Here's exactly what they wrote. Silver still looks relatively cheap despite the historic rally. The gold-to-silver ratio is now above 80 points on an annual basis, near the highest level since the 1980s. This is roughly 2.58 standard deviations above its long-term historical mean, according to Crescat Capital. This ratio has been above this threshold for roughly 5 years since 2020. By comparison, during the 1930s and the 1980s, it was 3 and 2 years, respectively. To put it simply, silver remains historically cheap relative to gold. History suggests silver may soon catch up to gold. Now, that's a very strong macro observation. When something sits far above its historical ratio for an extended period, like multiple years, it usually catches the attention of analysts because it signals that the relationship between two assets is stretched. The Kobisi letter is simply highlighting that silver is historically inexpensive relative to gold. This doesn't predict any direction, it just shows where today stands compared to the past. Next, we have a short but important technical observation from Squeaky Mouse. Here's the exact wording. Silver dropping down to the support levels, which is where I'm looking to get in once proven they will hold. This reflects a classic technical mindset, waiting for confirmation at support rather than acting on emotion. The key phrase here is, once proven they will hold, meaning the user is focused on structure and confirmation, not guessing. Again, this is simply someone's personal approach, not a signal for others. Now let's move to the insight shared by Rashad Hajiev. He wrote, Silver sold off today to form fifth wave of Elliott, which completes the declining wave structure. I would expect counter-trend ABC move starting from tomorrow. This is a very technical view. Elliott wave practitioners look for wave structures that show exhaustion points. According to Rashad, he believes the fifth wave is complete and a corrective ABC structure may begin. Whether that plays out or not, Elliott wave commentary always adds nuance to market psychology. Next, we have a very honest and analytical observation from Stoic Silver Bear. Here's the full tweet. Silver is still trying to form that handle, or path A, but is starting to get bear flag vibes. I would take a breakdown of the 4-hour cloud very seriously if it were to happen. Still much to learn today. This is a great example of balanced technical thinking. They're acknowledging both bullish potential, like forming that handle, and bearish risk, like bear flag vibes. The line about the 4-hour cloud shows they're watching key structural levels closely. No hype, just analysis and humility, which is refreshing. Mark shares a very clean technical view. He wrote, I'm no technical analyst, but the silver price action is showing what appears to be a classic cup and handle formation. This is one of the most reliable bullish continuation patterns in traditional technical analysis. Cup and handle is a famous chart pattern, often discussed in traditional technical analysis textbooks. Mark isn't making predictions, he's simply saying the chart resembles that formation. This is the kind of pattern that gets traders discussing potential momentum and market structure.
Here's exactly what Dr. Potassium wrote. Silver still pretty high off the arc. Wouldn't be shocked if it went sideways for a little while until gold takes off again. Still closed above $50 today, so that's a good sign. This is a calm and realistic outlook. He's basically saying that silver has moved far and fast, and when assets do that, a sideways consolidation phase is normal. The key phrase here is, wouldn't be shocked if it went sideways, which simply reflects patience, not prediction. And the note about closing above $50 is an observation about strength, not a signal. It's refreshing to see balanced commentary that doesn't lean to extremes. Next, we have a very detailed post from Bob the Billionaire. Here is his tweet word for word. COMEX silver drain continues, no end in sight. Silver, 6.13 ounces gone, again, no deposits to replenish. New paper supply slam prices while real metal gets drained. Receipts go to bank. December deliveries look massive. How can COMEX survive into early 2026 at this pace? This one touches on a long ongoing discussion in the metals community: physical flow versus paper market behavior. Bob is highlighting the contrast between physical withdrawals and the influence of paper contracts on short-term price action. His final question, how can COMEX survive into early 2026 at this pace, isn't a prediction, it's a reflection of concern about sustainability if current trends continue. This is a common debate: physical market tightness versus futures market volatility. It's great to see someone expressing it clearly and passionately.
Up next, I'm sharing a clip from Gary Savage where he explains his view on the recent silver price action. This is for educational purposes, so you can understand how different analysts interpret the market.
We've had, the initial move up to 50, close to 54, I think it was, and we had a correction of 15%, give or take. And then we made kind of a marginal new high, and now we're pulling back. And I'm trying to, maybe I'll know by the end of the week, probably just need to see a little more action, but it looks like it's trying to hold that $50 level. If it does, then this turns out to be like a retest of support, and I've got a target of $100 silver in 2026, maybe even as early as late spring of 2026. But I think that the odds are really good that we get there by the end of 2026. So I think we've broken the suppression of the silver market, and I think true price discovery is happening now, and we're on our way.
Gary Savage shares his personal interpretation of recent silver price movements. He points out that silver previously surged toward the $50 to $54 range, followed by what he describes as a roughly $15 correction. According to Gary, the market then produced a marginal new high before pulling back again. Gary highlights the $50 price level as an important zone that he believes could act as support. From his perspective, if silver holds above this level, it may represent a classic technical retest, where price returns to a breakout point before potentially continuing its trend. This is a common idea in chart-based analysis, though it's not a guarantee of any future outcome. He also mentions his own view that the silver market may now be entering a phase of price discovery, and he shares his belief that what he calls market suppression might be weakening. These are his personal interpretations and reflect one analytical style, not universally accepted facts. Gary goes on to discuss his personal target for silver, around $100 sometime in 2026, possibly earlier, based on his chart reading. It's important to understand that this is his own forecast, and markets are unpredictable. Analysts regularly offer differing projections, and prices can be influenced by many variables, such as global demand, industrial usage, currency trends, investor behavior, and broader economic conditions. Overall, Gary Savage's comments offer insight into how some traders view major technical levels and market structure. This commentary is presented strictly for educational purposes without suggesting any action for viewers.